Update on the Keystone spill. The company now says, TC Energy says, it has recovered about 3,000 barrels of oil this is, not just oil and water, out of the estimated 14,000 spilled. And they've excavated the area around the affected segment of pipeline. They say that's important in the repair and investigation process. Let's stick with oil. The big question on many people's mind is, when will global oil demand peak and then start dropping? We're joined by Janetta McKenzie, Senior Analyst at the Pembina Institute. Janetta, thanks very much for joining us.
Thanks for having me.
You've been tracking predictions by governments or research organizations. Is there a strong case to think that oil demand will peak this decade and drop?
Yeah, for sure. There's a few things to highlight here out of our report, which brought together these different modeling initiatives, which is first is we really are beginning to see these trends of long-term declining oil demand converge across institutions, from oil companies like BP and Equinor, the International Energy Agency, or research organizations like Bloomberg New Energy Finance. It is important to keep in mind that these are scenarios. They're not precise predictions, but these models are based on different sets of assumptions about changes in policy, technology, and the economy. But what we're seeing is that when these changes are assumed to accelerate in line with announced climate pledges around the world, we see a pretty significant decline in oil demand from now until 2050 and starting this decade. And even using some of the least ambitious assumptions about economic and technological development, we're still seeing a plateau and decline of oil demand globally, although more slowly.
Janetta, I just cut you off there because we're looking, I want to walk through these wonderful graphs that you produced. We're looking at one that says if the net zero goals are met, we could get to a decline to about 20 million barrels a day by the middle of the century from about 100 million. So that would be a huge drop.
Yeah, absolutely. In the models that are aligned with goals of either limiting average global warming to less than 2 or 1.5 degrees Celsius, or aligned with a net zero goal, we see a much more rapid decline. And those models are aiming for those goals. So there is still a gap between the climate policy and the technology that we have available to us and where we need to get to align with these net zero scenarios. But it is a quite drastic and rapid decline in oil demand if we align with a net zero or 1.5 degree goal.
I mean, it's easy for me to sit here and say, we're not going to do it. How could we ever do it? Javier Blas, the Bloomberg writer, has an interesting piece saying, it's like fusion. It's always 10 years away. Because what we're seeing is a rapid consistent global increase in production. I know the pandemic has distorted things.
Yeah, absolutely. The pandemic and the Russian invasion of Ukraine have led to a very tumultuous year in energy, and we will likely see some of that volatility continue in the near term. But some of this volatility is actually another variable that may accelerate these demand trends to decline as countries work to diversify their energy sources and improve their energy security. The IEA report noted that some regions that had a greater deployment of renewable energy this year were a little bit more shielded from some of the price volatility that we've seen. And also really critical from a lot of these scenarios is the importance of road transport and electric vehicles in these scenarios. Road transport makes up a really big portion of global oil demand, about 40% in 2019. So how quickly electric vehicles are taken up is really critical in looking at sort of what these trends will look like in real time. Policies like electric vehicle sales standards will be really important to watch develop in the next few years, as well as keeping an eye on supply chains for critical minerals and the processing of those minerals in the EV supply chain.
Look, as I say, it's easy for me to pour cold water on this, but don't we have a society that's based on fossil fuels? And some observers say fossil fuels are the thing that had lifted us out of the horrible living conditions of the 19th century, for example.
Yeah, absolutely. We have relied a lot on fossil fuels to move through the Industrial Revolution and up until today. But more than fossil fuels being the thing that has allowed us to develop so quickly, it has been energy more broadly. In the past, that has been fossil fuels. it does not have to be fossil fuels in the future. And in fact, developments in renewable energy, in electric vehicles, in energy efficiencies like using heat pumps or different ways to cool our homes mean that renewable energies are becoming cheaper. Electric vehicles are becoming cheaper. There is some forecasts from the Bloomberg New Energy Finance that suggest that purely on purchasing, electric vehicles may reach cost parity with internal combustion engine vehicles, again, this decade. And on a total cost of ownership basis, they're already cheaper.
And I know you should never bet against human ingenuity for solving problems as well. What about if we don't meet these targets, though, these stated targets? And of course, there's going to be different governments in power in the decades to come, and things can get, they can reverse course on things easily.
Yeah, absolutely. The net zero scenarios are quite ambitious, and even scenarios that model announced climate pledges assume that those pledges will be met in full and on time. And that is a pretty big ask when we're talking about the next 30 years. But for the first time this year, we're seeing in several different scenarios that even under current trends, oil demand will begin to plateau and decline. It'll just be a much gentler decline. And these changes in the global marketplace are already happening around the world. The market for energy is already shifting. And so whether there may be some backtracking on policies in different regions of the world as we move forward, but in terms of technology development and economic trends, those things are already happening. And acknowledging kind of those general trends will help Canada and help Canadian industry stay competitive as these macroeconomic forces continue to shift.
Well, let's bring it home. Under existing policies, by the middle of this century, you guys are projecting a fall in Canadian production, a slight fall, but under the pledges, it would be a radical fall. Our production could fall by 40% or more.
For sure. So these are based off of the most recent International Energy Agency World Energy Outlook. And so again, this isn't a precise prediction of exactly what will happen, but based on what we think will happen with oil demand, this is what we think is a reasonable expectation for oil production from Canada. And Canadian oil is quite carbon intensive. It can be quite expensive to produce. So the onus is really on industry firms and producers here to prepare for this shrinking and changing global market by aiming to be not only cost competitive, but also carbon competitive.
That's interesting, carbon competitive. Do you think countries will say, we're going to tax your oil if it's high carbon?
Yeah, I think it is a possibility. There are policy mechanisms like carbon border adjustments where countries do effectively just that are beginning to be developed. The European Union is quite far along in their development of carbon border adjustments. And as our trading partners pursue their own decarbonization goals, they are likely going to be looking at the carbon intensity of the resources that they are importing.
And of course, the Canadian oil industry saying we're pushing ahead with carbon capture. We don't have time to get into all that right now. Janetta, thank you very much for joining us, though.
Thank you.
Janetta McKenzie, Senior Analyst at the Pembina Institute. Still ahead.